Yo, what's up? What's up, my people? It's your boy, Mr. Fex. It's been a while since we did this, since I did the recording, and I'm sorry I'm back. So we're going to do this again. So I want to have a review on gold, because as we're waiting for the market to open in the next around 6 minutes, I want to take you through about what I'm expecting. All right. So this is a weekly time frame. All right. In the weekly time frame, we can see the liquidity sweep. This is the highest point, right? That's a liquidity grab there. Okay, market grabbed this liquidity, pushed to the upside, dropped. You can see it dropped and took out this lower side liquidity. Just a top-down analysis. All right, there's the liquidity here. Now, from this weekly time frame, we can see price grabbed this liquidity and was able, to tap into this imbalance here. You can see that's an imbalance. The price tapped to that imbalance there. Once we tap to this imbalance, fill this gap, and price started pushing to the upside. Now we can see again from this place, price pushed to this high, and according to the weekly time frame, we can see this is our swing low, right? This is our swing low here. Which one exactly? Let me get the correct swing here. This one and this one. This is a correct swing low, and this is a swing high. Okay, right there. So why am I saying this? I'll prepare a topic on the correct swing. This it must be indicated. The main swing must be indicated by three. Actually, a lower low, a deep low, then another low. It has to be guarded by at least 2 points. Then it rallies to the upside. And on this upper side, you can see we have this, and have this. All right. So these are correct swings here. And this one is just intermediate swing here. So we can see the price is already on premium, which means that we should be interested into looking for sales. Now, this place, price grab this liquidity. And possibly we can see on premium, if I go back from this swing low, right, from this swing to this high, we can see we have from this particular zone, we have this imbalance, right? We have this imbalance there, the weekly imbalance. And also here, on the discount level, we have our levels. So possibly gold, if it decide to break, to snap on the downside, these are the areas we expect it to give us a reaction from. But this is a weekly time frame. So coming on a daily time frame, we can see the price is showing us a sign of dropping. So we can now refine drop on the daily time frame. And what we want to see is this. If the price is bullish like that, okay, like that, it has to sweep, collect this high, drop down, break this low. Then if we see any imbalance on this push, all right, we want to see the price push back to that imbalance and later drop, So this one is just a change of character here. Okay, change of character. Where's that? The choke, okay. This is what we call just the liquidity, buy side, buy stop, liquidity. Call it the buy stop, where is that? Okay. Then if the price start dropping and you see an imbalance on this particular zone, we can use it to look for confirmation to push the price to the downside. So from here, we can drop on now on the daily time frame. And now coming on the daily time frame, we can see from what we can see on this particular price here. Here we can see this is a daily time frame on gold, and what we are having here is a bigger picture. What to expect. You can see gold grab this liquidity, and we can see a drop. All right, gold was bullish earlier. First of all, it tapped on this liquidity, took out this liquidity. All right, took out liquidity and went to the upside, and this is just a bullish order block. All right, that is the bullish order block. This is an order block, bullish order block there. If I drop on, if I change the color of this order block into red, and a drop on 1 hour time frame, you will see how it holds the price, right? You will see how it holds the price, and this is a topic that I'm preparing for my community, my private community. We can see, you see this is the order block, the high time frame order block. I want you to see how the price holds that level. I'm sure you can see how price was able to hold there, to hold this level strongly, and bounce to the upside. And you can see very, very strong level to hold the price. Again, here we can see we have another order block here, right? Price taps on that and goes to the upside. So let's go back on daily time frame and proceed with what we're expecting. Now, on daily, when you're here, we can see price tapped on this liquidity and went to the upside. All right, break upside, came back to tap on this one and went to the upside. Now, the price has done what? The price has dropped, yeah, broken this level. So this is what we call the choke, change of character. Why? Because price was initially bullish. Price was initially bullish, as you can see, all right? Went up, grabbed this liquidity, and price was broken below this low. So if it pushes back to a level of imbalance, we expect the price to do what? To sell, right? This is what I'm talking about, yeah? This is just a grab of liquidity. This one is a change of character, right? Choke there, and this is just liquidity or buy stop. Okay, and on this leg, I've said that if you find any imbalance here, any imbalance with this particular zone, then you can sell. So you can see by looking on this leg, which is this one, a drop, breaking this level. We'll do this and hope it's more visible. Here you will see there's this imbalance between this level and this one. The price tapped on that and dropped to the downside. What does it show you? It shows you that the price is bearish there. Now the market is open. Now we can see where's the next liquidity. The next liquidity is on this low, right? This is the low, the all-time low that created this push to the upside. So this level contains liquidity, okay? Right, that level contains liquidity. So once we have that, what are we looking at? We can see gold trying to push to the upside, but the real thing is we can see this is what we call the order block. All right, I'll prepare the topic for the order block, right? This, all of this is the last bullish candles before the sale, yeah? So this is your order block here. This is like your order block, and that's why gold is here and it's giving you a reaction. It might now go up a little bit, then we'll expect it to go down. Expect a sale from that particular area. So let me first do this. So once we are here, we can see this is a liquidity. What does it mean? The main picture is here. Price is bearish. So we can drop on 1 hour time frame and start looking at this area as the price dropped from that area. Now looking at that, let's see. From this area, you can see price pushed to this zone, tap to that level, and it dropped to the downside. Now, we can see from this level, price after it dropped, it took out this liquidity, right? This is just like a break of structure. You can call it a boss or you can call it a liquidity. Grabbing this liquidity, because price dropped like that, after it grabbed this liquidity, it has a chance to go up again. Where? To this order block, order flow. You see this level from this candle to this high. Here we have your imbalance there. This is what we call the internal liquidity imbalance there. So what does it mean? This is just a high time frame order block, which might hold with a wick, but the price actually, I want to see the price again push to this high before dropping to the downside. So from today, this is a 1 hour time frame. I'm expecting the price to continue pushing to these highs before it drop, because you can see this is just a liquidity that is here towards the balance. And we can see these conservative bullish candles before the drop. They hold a very strong, right, breaker, right? A very strong breaker, because this price dropped to the downside and went to the upside like that. So if you can refine it slowly into this particular zone, this can be a breaker, okay? If the price pushes to these highs, right, pushes to this level, we can look for a sell here on the lower time frame, and we can go short there. Now, anything else that we can touch on this, we can drop on 15 minutes time frame and try to refine this level and see what is happening here. You can see on 15 time frame, price grabbed this liquidity. Okay, we grabbed this liquidity. After grab this liquidity, price started pushing to the upside. Yeah, price started pushing to the upside. And what do we have here? You can see price started pushing the upside like that, going up, and we can see this also was this one was acting as a support here. And now this means that was the next level. Next level that was acting as a support. The next level is this one, right? This one is a support that is not used. And also we have this level, right? These two level, it have to be tapped, and where's the liquidity? This is a low, was in this high, this is your liquidity. So price has two levels here that is likely to come to, right? Come here and give us a reaction to the upside, or push to this low and give us a reaction to the upside. So we can go back to 1 hour time frame and try to look for a refined liquidity area, right? So if we come here, this 1 hour time frame, if we check very well here, we don't have any imbalance. This is the first candle, the second, and the third. So this low, this means this low will not hold. But here we can see here in between we have these two levels. That's a good imbalance area. So what are we seeing here? We might see the price drop to this low and goes to the upside, or just take out this low and push to the upside. Since the market is open, expect to see the bearish move, and you can see this one. What does it mean? We have a short-term buy, then a long-term sell on gold. So by seeing that, you prepare to wait for this low to be taken out. You have to wait at least during the Asian session, on the Open of London session. Then we can, once this low is taken out, then we prepare to look for a push to the upside. And if we go back to 15 now to see this zone, this imbalance zone, how it looks like, you can see if we come back here, we see just respecting this order block here. Okay, this order block, then close candle, bullish order block. So if this price pushes drops from this level, and you want to see the price pushes to the upside, so that's what we want to see. Okay, at least that's what we want to see. And there's a gold. So let's check GBPUSD. 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 What do we have here? We can go back to, because I'm just doing a top-down analysis in this from the weekly time frame. Let me just run it from the monthly. Okay. Now, from if you come to the monthly time frame, we can see price looks bearish, but actually this is where we grabbed the whole liquidity here. Okay. Grabbed all the liquidity here. After price grabbed liquidity, started pushing to the upside in target of this is the liquidity here. Okay. Is the next liquidity. But as we target that level, you can see this is a swing high, this is a swing low. So we can have our fib or our measurements here. You can see the price is in what we call the premium zone. The price being on premium zone, what does it mean? High chances of selling than buying, because the swing high, the swing low. So once we have that, you can prepare to look for a sell than a buy according to the monthly time frame. Now, on monthly time frame, we can see our internal structure imbalance is here between this level and this one. And this is the imbalance that was filled, right? This is the imbalance that is filled here, monthly imbalance. But up here, you can see we still got one more balance here, right? And actually, price seems to almost tap into this level. This is also a monthly imbalance. Now, once we have this, what does it mean? Once we have that imbalance that is here, price already acted on this one and it's dropping. So we can see we're at our level of premium. So we can drop on the, and you can see on this low here, we have this fair value gap to around this level, right? There's a fair value gap there. So what does it mean? The price has a liquidity on this high buy stop. That's what we call the buy stop, and this is what we call the sell stop liquidity. Okay, I just get a sell stop liquidity. Let's put their liquidity level. So from this level, we can see this leg is bullish. Yeah. So this is weekly, the monthly time frame. So you can narrow down to the weekly, and we can see our price still pushing to the upside. This was the order block. You can see how it was able to hold this price. Okay. This was able to hold this price to the upside. Now, price came down and broke this low. Because it came down and broke this low, what does it mean? It took out what you call the sell side liquidity, or we call it the sell stop, and then tapped to this imbalance here. This is what we call the imbalance there. Tapped to this imbalance and started pushing to the upside. Now, from where the price is, we can see the price is bullish and it's targeting actually this liquidity up here. So what do we have? We can see price, when it was pushing to the upside, there was this imbalance that was left earlier. It was not used according to the weekly time frame, and this was the order block, right? This is just an order block, a bullish order block. Pressed up on that and started pushing to the upside. I hope you guys were together. Don't get lost. And if you feel you're missing something, just drop your comment so that I can redo. All right, I can redo or explain again so that you can understand. So already you can see the price from what we can see here. It seems to be still bullish after tapping on this order block, and the price is still running to the upside. Okay, and this is the last buy stop we have here. This means that the liquidity is on this highs here. And we can see after price taps here, went to the upside, and this was the imbalance that was left here. Right, imbalance represents what we call the internal liquidity. After price tapped on this level, what are we looking at? We can see this candle below it here. All right, this is just an order block. Okay, so we can refine to a daily time frame like that and come to our daily time frame. If you come on daily time frame, price is bearish, right? Price is bearish. If I go back to the weekly, let me see if there's something I can refine. Actually, the price already tapped to our imbalance already, tapped to our imbalance already. So the gap is filled. So expect the price to be bullish. Now we can see price taps on that level, but with the order block, we can see our main order block is this candle here. Okay, this is our order block. Now, once price taps here, it must take out this liquidity. All right, that's the liquidity that was taken out. Now expect the price to be bullish on daily time frame. After tapping on this order block, we expect the price to run into this, what we call into this liquidity before dropping. So we can narrow down to the 4 hours time frame or the 1 hour. We can see price just collected all this liquidity and it tapped to this order block, all right? This particular zone. So I like indicating just with this red candle. Okay. Okay, there. Tapping on that order block, we expect the price to be bullish. This after it, it dropped after collecting all the stop loss here. Then it drops to the downside. Now, the price to continue going down, whether to go down or up, it has first to buy, because if it breaks down here, right, if it broke this low, this bearish candle, it must come back to this imbalance here. So you can see we have some levels for the price to go to, and up here, you see, those are the two levels. Once the price run to, those are what we call the internal liquidity. Okay, there. So what is here? We can drop on 1 hour time frame, and you can see these levels, they are still significant. Also, the price pushes there. So I can drop on like 15 minutes or the 5 minutes first to see what the price, what was the price doing here after tapping to this level. We can see if we come here, we can see there's a shift. There's the deepest low here. So this is your change of character there. Choke. Then after choke, where's your imbalance here? You got this imbalance again. So this means if price opens, it has to come and move to this fair value gap. And what is the liquidity? The liquidity is here. So does it mean if the market opens on 15 minutes, want to see a sell around this area, then you want to see the price rallies to this imbalance up here. So that's what I'm looking at today. And when you find time, also go to the chart and try to look. Just want to see a sell before the buy, because remember, when the market opens, always buy low and sell high. You need to understand the accumulation, manipulation, and distribution. Lastly, one more last pair that people trade mostly is the Euro USD. I talk about Euro USD. Euro USD. Now, on the Euro USD, if we go back to the monthly time frame, and you want to see what has been happening in this particular setup, we can see the price is bearish. Yeah? As I said, yeah, this is we can call it a break of structure or a graph of liquidity, right? Just liquidity taken out. And once liquidity is taken out, now this shows you that the price is now going to the upside, and this is what we call the extreme buy stop liquidity on monthly time frame. So where is our swing? We can see this is our swing high and swing low. Price is already on premium, so we are likely to have a sell than a buy. Only if the price taps what we call the internal liquidity, which is the imbalance. You can see we have a very small balance here. Okay, a very small imbalance. Now, once price stops there, we can see a rejection in the price. So we need to see what is happening here on the lower time frame. We want to see the price dropping. So I'll drop on the weekly, try to see price trying to push down. Yeah, we can see price after tapping on this level, and this is a down close candle, right? This is just a down close candle which acts as what? As an order block, which acts as a resistant. Okay, resistant. And find time to teach you all these things, man, like on a good time. Price pushes back to this level, taps to this down close candle, which acts as a resistant. You see, when the price is bearish, what I mean is this. The price is bearish and break the structure. Mostly when it comes back here, this line will extend and act as a resistant here, and the price will drop. But this is what we call the smart money resistant. It's not just a normal resistant. So this you have to understand what is an order block, how it works, then you can work with that. So you can see price stops there and it dropped the downside, and again took out this low, right? So once taking out this lows, the same thing I've told you guys, that if the price, all right, price is like that, sorry, if the price is bullish, I mean, price is bullish, and take out this level, once it takes out this level, like that, break of structure here, and this will act as an inducement. But if it takes an inducement and comes here into this imbalance, an imbalance here, and it taps on that level, we are likely to see the price drop. Yeah, it's just a liquidity side. This will call it a choke. Then this level will call it what? If you come to this imbalance here, expect the price to drop. So you can see here, price was bullish. Okay, price was bullish, and if it was bullish, I want you to see, I've been talking of the order blocks. I want to see how this bearish. All of these are order blocks, all of them. All down close candle in a bullish move are order blocks, yeah? All the candles you see press, taps on that level, and sit on that very well because of what? That is an order block. If I drop on 1 hour time frame, you will see how strong that level is, yeah? We'll see how strong that level is. Where is it? How far is it? How far is this level? Is it that far? Was it this far? Goodness, yeah? What's that? Okay. Liquidity grab. What's up? Okay, press come back here. Want to see that level. How small is that level? Can't even find it. Let me go back to the weekly and show you, increase the size of that candle, oh, it's here. Very fast. I'll have to do this so that you can see it, yeah? Allow me to do something like that. And to go back there. Just look for that pen, sorry. Go back, go back, go back. Try to go back again. Try to go back. Here. Oh my goodness, you can't see it. It's here, but I hope I'll find something new to show you. The price can't open that level, but let's proceed. Price sit on this level strongly, and you can see a retest here, and the price will push to the upside here. Now, this is just a smart money concept. Nothing has changed here. Now you see price drops on the lower side, right, and pushes to the upper side. Now price pushing to this upside here. We can see now the price started dropping here, took out this low. This is just like a change of character, right? This is just like a choke because price tapped the high time frame. So this one is a choke, and you expect the price to come back to that imbalance before it drops. Now where's the imbalance here? You can see between this candle, this is the second and this is the third, you have an imbalance here, right? You just write imbalance there. Price taps on that imbalance and started rallying to the downside. The same thing I've told you guys here. You can see if price is bullish, take out the previous high, and if it comes and breaks this low, and if it returns to any imbalance here, expect a sell. So you can see price is bullish, right? Takes this level, you can see drops and takes out. This is the last bullish candle before the sell. Breaks this level. This is what we call what? We call this level and a change of character, and the price when it comes back here, you see imbalance here, taps that level, and you can see a push in the price to the downside. So already we have an idea that the price is bearish, and this is what we call the liquidity levels that we need to target. Yeah, need to target these levels. Yeah, down there. So those are the levels to look at to see the price push to these levels here. So here we can see the price taps here and started again pushing to the downside. What does it mean? We can now use what we call a breaker. A breaker is the down close candle. We call it the down close candle on a bullish move. You see, this is a bullish move, and this is a down close candle, right? A buy before the sell. The first down close candle for the buy before the sell is on. Can mark this candle and extend it to this level here. So this is what we call a breaker or the block. Now on this level, price comes here. So you can go on the lower time frame on the daily and you look for an entry here. The daily or 1 hour time frame. So I'll open the daily time frame because the weekly breaker. You can see on this weekly breaker price, this is the last sweet spot level. The price taps here. And if price is here, what are we expecting? We're expecting a sell, and we're expecting the same thing, yeah? We expect a bullish move, as I've shown you, all right? I've shown you this bullish, like that, block of structure, change of character. If the price comes here and find what we call an imbalance here, we sell, right? Now you come here, you can see this is a last bullish move to the upside. Grab the liquidity on the upper side here. Okay. Then this is a change of character. Okay. Once we get the change of character, where's the imbalance? You can see Price close back and come back to fill this imbalance here. Okay, price stops in that imbalance, and this is just a daily breaker. Weekly, in fact, the weekly breaker price stops here, and we can see now the price started pushing to the downside. So in this downside, there was the main low. The main low is here. Okay, this is the main low. According to the daily, the low that has liquidity. So what do you do here? This continuation, we can expect the price to push back up to this level. This is what we call a bullish, a bearish, or the block. This down close green candle here. It will act as a support, a resistance. Yeah, if the price comes back here, it will face that resistance and expect it to push to the downside. Yeah, I want to show you how that level works using the previous levels in the price. You can see all this up down close candle, the sell before the buy, which is like an order flow. Mark this high. I want to see. You see how the price comes back and support itself there, and it goes to the upside. The same way, if you can see here, we'll do this, you'll see price break the upside, close here and return to sit on that before pushing to the upside. Now, here, you will notice price started pushing to the downside, and any up close candle that the market leaves will act as a resistance. Look at that. This is the last up close candle before the sell. If I extend like that, you'll see price comes back up here and pushes to the downside. The same way, if you see this price started pushing the downside, and you can see pushing to the downside. If it comes back, this is the last up close candle before the sale. If we extend like that, it acts as what? As a bearish order block. Price market taps to that level and it drops to the downside, pushes to the downside until when it took out this liquidity here, grab this liquidity here. Then price, after collecting all the stop loss here, started pushing back to the main break again. So once price is here, we know that if it's going to push the upside, this is the end of it, then it will drop because this imbalance has been filled. So we can, with that idea, we can know that we have a short-term buy. If we drop on 1 hour time frame, we can see the price looks bullish. Okay, price looks bullish, but we know that this is the end of this move here. It can come around this area, and just above this level, we want to identify the imbalance zones here. We have this imbalance levels, which might hold this price and push it to the downside. So according to 1 hour, expect we see the price want to go to that level and then a drop. So from there, I can drop on 15 and look for a buy if you want to get a buy position there. Remember, the market has just opened, so we cannot just jump in. Want to buy low, so a drop on the lower time frame, like the 1 hour, 3 minutes. What is the last push to? You can see this is the last level. Price grabbed this liquidity here. Okay, grabbing this liquidity. This is the high that caused the low here. High that caused the low is a change of character. Choke. This choke was the imbalance. You can see this is what you call the inducement level. But for us, we're interested in finding the imbalance. This is a level, which was your imbalance there. And the market fills that level. And you can see as your order block, the last down close candle before the push to the upside is this red candle here. It's your order block. Okay, this is your order block here. Price stops in that level and rallies to the upside, as you can see, rallies to the upside, and the price is here, and this way it's going. Yeah, it's going. We're going to have a short term bullish. So from where the price is now on 15, how do you catch this move? On 15, at least we want to see the price take out this liquidity, right? This liquidity level, and at least come back to this, what we call this imbalance. If the price will be able to create this scenario, we don't know what will happen at the end of the day. But if the price comes back here and we expect to go short from this level, then we can create our interest to look for a sell to the downside. And I think from what I'm seeing there, so we can still wait and see how the price is going to be, but you have a short-term buy, then a long-term sell. So guys, let's catch up on the next video. And if there's something you'd like to see me touch on it, then we can proceed. And just master one thing, okay? You can, I was still working with what we call the smart money concept, whereby we talk of breakout structures, the inducement, and those other levels. That topic is still on, and I'm going to resume it this week. But the way I'm just doing this analysis today, because it's around 1:30 a.m. late night and morning. So I hope that when I get time, I'll proceed with the other topics with the time slowly. And if you like to join our community, make sure that you follow the link on the description. Leave your comment, subscribe, and share. And let's meet on the next video. It's your boy, Mr. FX.